All right, so we'll keep the trade open in the meantime. Now, on the platform itself, there are a few tools that you can use that's for people that are interested in how to make decisions of the market using some indicators. There are indicators that we are able to use, that we're able to deal with, that we always suggest our clients. Now, the most basic one that I always show my beginners is called stochastic. There's a button right there that opens a folder with a whole bunch of technical indicators. And before I'm going to talk about this, let's talk about the market in general and what are the main ways of how you can analyze the market, how you can look into the things and make decisions. So there's two main ways. There's technical analysis and fundamental. Technical analysis allows us to predict what's going to happen with the price of something based on statistics, indicators, mathematical models, complex formulas. All that allows us to predict the technical movement of prices. It's really, really good to predict short-term movements. For that specific reason, we have the algorithm that a lot of you guys have joined us for. The algorithm is using hundreds of different indicators that is analyzing the market technically. On the other hand, there is fundamental analysis, which is far more important, which involves understanding of what is really happening in the world. It involves fundamental events, elections, news releases, big things happening in the market. Most of you guys, ladies and gentlemen, still remember the COVID. COVID was the biggest fundamental event of 2019. During COVID, prices of everything went down in price. Oil price, for people that don't know, went to zero. Literally went to zero when the first lockdown started. And that was the money time, the easiest time to make money on oil. When Russia invaded Ukraine, a huge fundamental event. Oil prices doubled 1 week after invasion. Gas prices tripled 1 week after the invasion. Wheat prices quadrupled in a matter of a week. It was insane. And still, we can feel the shock waves after this kind of event because the conflict still goes on. For the fundamental analysis, every single portfolio manager that we have, including myself, has a team of analysts that are working for them, for their trading group. So each of you guys that are not working with me, you're working with your portfolio managers, and they're not by themselves. They have teams of analysts, but all with combined experience of hundreds of years that allows us to keep track of whatever's happening in the world. Their job essentially is to munch through the information daily. And we as portfolio manager get sort of a dissection of it, and we can present it to you, what is actually important or required. Now, fundamental analysis allows us generally to predict how people are going to react to certain things in the market. The algorithm itself, it's an amazing tool to support whatever decision you're making. But algorithm, it couldn't predict what's going to happen when COVID's going to start, right? It cannot predict how Apple's stock price is going to move if Apple is going to release a new iPhone. It couldn't predict Russia invading Ukraine. Even though it's an amazing tool, it's just a tool that you can use in combination with something. So we're using both fundamental and technical analysis to ensure that the investments that you are making, ladies and gentlemen, are going to make you money. Now, going back to the trade that I made, another one on Chevron, we have about 24 pounds of profit. Not big of a deal, but the point is that the price went up. I will change it quickly to 1 minute chart to show you. So this is where we opened the trade. From that point until now, price went up. So that difference, if we close the trade right now, would give us a profit of 57 pounds. For the sake of example, let's do it. I'm going to click here to close the trade, and it's gone now. That money went to my balance. I realized the profit. So if I go to history, there it is, 57 pounds in profit. Let's continue. All right, so once again, to sum it up, middle of the screen, a candlestick graph. This is where we are looking at what's happening with the prices of different things. Whatever we have on the left, this is a market watch that allows us to pick and choose what we would like to deal with. What we have on the bottom, that's our order section. It can have our open orders, it can have our closed orders, the history generally, and we're going to continue with that. Let's spend 5 minutes for questions. All right, ladies and gentlemen, there is a question section. If there is something specific that you would like to ask, understand, figure out, don't be shy, shoot a question. I will see that in the question section there. All right. We have questions coming in. I'll pick this one. Do you guys have 100% success ratio? Very good question. The answer is no. There is no such thing in the world as 100% success ratio. There is no such thing in the world as risk-free. It doesn't exist. If somebody tells you that, most likely they're trying to sell you something or straight up lying to you. Now, in terms of the success ratio, we keep it at very high levels based on the approach that we take with the trading strategies of ours. Using combined the algorithm and analysts, combining technical and fundamental analysis, we're always on top of the game. All right, another question from Mr. Van Kestel. Is it important to know the meaning of a wick? Not quite, I must say, depending on what you would like to do. If you prefer to trade by yourself eventually, learn how to trade by yourself and to be in full control of whatever you're doing with your money, understanding what is a wick, it's healthy. A wick is usually a wick on the chart. Looks like this, you know? So not that important. All right, more questions. I hope that answered your question, Mr. Van Kestel, but... Okay. What is the maximum amount of money that I can invest? It is something that you're going to have to discuss with your portfolio manager, right? I always tell my clients that your maximum of how much you can invest, that's your maximum, whatever you're able to afford to invest. Generally, let's step down from the understanding of the platform and let's talk about something extremely important, which is investors' mindset. Investors' mindset, it is something that can be built, but it cannot be gained. You cannot learn it, but you can build it. Most of the people in the world, they have an employee mindset. As soon as you get your paycheck for a job that you're done for a month, you're an employee and you have the employee mindset. For example, where I come from, and I'm coming from the States, from Chicago, Illinois, there is a specific mindset in America that ruins everything. It goes like this. You go to school, you graduate, you get a job, you go to college, you graduate, you get a job, you get out of debt, you invest long-term in stock market. And that's it. That's how money always stays in the system. That's how middle class is middle class, not changing. It's beneficial for governments to always have a division between people that make money and don't make money. It's important for the government for people to be pretty much the same. That's how people pay taxes. That's how governments stockpile their pockets. But an investor's mindset is a realization that your money needs to work for you instead of you working for your money. Most of the people in the world, they work for their money, right? Go to work 7, 8, 10, 12 hours a day, go back home, sleep, go back to work 12 hours, go back home, go to sleep. kiss your kids in the morning, cook them breakfast, go back to work, and it keeps going for years and decades. Eventually, people retire, having pretty much nothing. It can be nothing. It can be something very small, but generally, that's how things will never change, because it's an employee mindset. The money that you made from work, most likely it's spent. Maybe it's saved, yeah, but generally it's not moving along. But realization that the money that you have can work for you, this is where investors' mindset begins. Ladies and gentlemen, every single penny that you have needs to work for you. It does. In the sense that, let's say, most of you people, you have savings, right? It is theoretically an investment, right? The bank can give you 1% interest annually, which is fantastic when inflation is close to 10%, so you keep on losing money. But a lot of our clients, my clients, other portfolio managers, with the savings that you people have, you're able to invest it. By investing it, you're able to make it work. You're able to create income and cash flow eventually. Because when the money is just sitting in the bank, it's not working for you. It's there. It gains 1% annually. It loses almost 10% in inflation, depending, of course, on the country where you, ladies and gentlemen, are and the continent. But generally, yes. So it's not working for you, it's losing you money there. But your money starts to work for you when it's invested and it's making more money than pretty much any kind of interest, or it's beating the inflation. Here, working with us, you all know what are the strategies that we are taking advantage of, what are the approaches that we take. Most of you people have made great results. I have looked into accounts of some people that registered. Fascinating results, I must say. But yes, so be sure to develop the investor's mindset. When we will be done, sit for 10 minutes and think about it. Let's imagine someone, like, let's say an average Joe, worked for, like, let's say in 40s, in 50s, yeah, worked for all his life, 50,000 in savings. And that person thinks that he is safe. But I want people to sit down and to think what's going to happen in the worst case scenario if we need to spend all that money, right? What if, like, God forbid, something bad happens, that money is spent, and suddenly you don't have savings. Yes, you might still have your income, but you lost 50,000. So when you're going to make 50,000 again, and let's say it took 20 years to build up those savings, you're going to break even. So you need 20 years to break even. But instead, have a thought of maybe some of that money can work for you. Maybe some of that money can be invested. Maybe some of that money is going to create that kind of income that's going to not just support you, that you can rely on, but it will gradually bring a change to the day-to-day life, to the family, to the future generations. We always have to think not just one step ahead, 10 and 100 steps ahead. It's a difficult task. It is difficult to think about where would you like to be in a year from now, in 5 years from now, in 10 years from now. When you start counting numbers of what you actually need, it becomes scary. But to finish on the high note, generally, let's wrap this up. We had an amazing webinar. You guys have a beautiful evening. In case of any questions, please contact your portfolio managers. Anything you need, in case if you would like.
What's happening? Audio was cut off. Both webinar will now exit. Oh. Okay, that's ended the webinar. Close. Oh. That's close already. Okay. This voice was gone.